not going to go into the details of how SVB collapsed or how SVB was saved and restored in the US and the UK. We're not going to go into the technical details of what really happened at Credit Suisse and how it was merged into UBS, though the headlines here is really, have we managed the banks in the US, the SVB case? Have we managed SVB as appropriately as we should have managed the bank? And on the Credit Suisse, the headlines that seems to be coming out of the situation is really there is a dominant of cultural issues at Credit Suisse, which created a succession of crises that put Credit Suisse in a position to being merged into UBS.
What you're saying is these are potentially, well, what you're saying is that these are isolated incidents and we shouldn't be expecting a domino effect?
Well, there is a potential for a domino effect if the perception of the market is banks are not managed to the point that they should be managed, and it creates a run, etc., etc. But what we've observed, actually what we've observed in the two cases, is that the states have intervened in three countries, in the US, in the UK, and in Switzerland, to save the banks. And that kind of begs the question, when you look at it from an investment management perspective, are we really in a place where we can't self-manage our own industries and calling for bank intervention when things go wrong, which begs the next question: are we still in a free economy, and are we applying double standards where banks and financial institutions will be saved to, yes, indeed, save us from a systemic crisis, but the questions cannot be avoided.